Good morning, everybody. Happy Monday. It's December 16, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We bring this to you every Monday and Thursday morning, roughly around 8 o'clock, maybe 8:30 in the morning, a couple of times a week, talking about a little bit about the markets, a little bit about earnings, what happened previously, what's possibly going to happen into the future, short-term future. Talk a little bit about the Fed, technicals, that sort of thing. So just really kind of a real comprehensive way of trying to figure things out, see how we're going to move into the future. So first half of December is gone, right? Today starts the second half of December, which is often, not always, often a very bullish time of year where we see a lot of money flows coming into the market before year end. Now, there's not a lot of trading days left in 2024. I believe there's 11 trading days left. We got 5 this week. We got 1, 2, 3, 4 next week, and then 2 the following week, right? Yeah, Monday and Tuesday. So the market will pick up again in the new year on Thursday, January 2nd, right? Day off on the 1st, which is a Wednesday. Don't forget Christmas Day is also a Wednesday, midweek. I think that on the 24th, it's a short trading day, but I'll check my records. I'm not sure about that. Don't check me on that one, but I need to check on that one myself. So in any event, about 11 trading days left until the end of the year. It's been a really strong year for the markets for the most part. Even the small caps, which have been struggling as of late, had a great month of November, up more than 10% November, giving back a little bit of those gains so far in December. But we've moved into the second half of December. So what's in store for the second half of December? Well, again, lots of money flows. We have the markets moderately oversold here right now. Yes, oversold. I'm going to show you the proof of that in just a couple moments. And we have interest rates that have been rising on the long end of the curve. The 10-year yield is up near 4.4%. Now it's pulling back a little bit. Now, what do we have coming up this week? Of course, we have a Fed meeting that starts tomorrow. It is the last Fed meeting of the year. It's number 8 for 2024. And by and large, the market is expecting another rate cut. So we had, remember, we had a double rate cut in September. We had one rate cut in November that came 25 basis points, and the market is now expecting one more 25 basis point. So a total of 100 basis points of cuts in 2024, from 4.5% all the way down, from 5.5% all the way down to 4.5%. So I'm sorry, 4.25%, from 5.25% to 4.25%. So what does that mean for the markets right now? Well, let me show you something. Let's see here. So look at this chart right here, and you can see this is the CBOE 10-year U.S. Treasury yield. Okay, it's not the bond, it's the yield, right? So when bonds go down, the yield goes up. When the yield goes down, bonds go up. Price of the bonds, right? It's like a dividend for a stock, right? When the stock goes up, the dividend yield goes down, et cetera, right? So we did see that yields came down quite sharply at the end of November and the early part of December. Came down to close to 4.1% and have turned tail over the past 5-6 days and have risen up towards the 4.4% level. Now, if the Fed does cut rates this week, it's going to cut rates down to from 4.5 down to 4.25. And what is that going to do to the yield curve? Well, we won't have an inversion anymore. That is, of course, unless buyers step in and really pound the yield on this 10-year yield, right? And driving yields all the way down below 4.25%. Don't see that happening here yet, and that is because the economy is not slowing down enough to see fixed income holders or fixed income buyers having to run towards bonds right now, right? So if we do see this inversion going away on the yield curve, right, it really generally means that the Fed is close to being done, right? And they've been wanting to try and get this curve shaped in a way that's more normalized. And what is normalized? Normalized is bottom left to upper right. I know that doesn't look good on my camera over here. It looks like the opposite, but it's from the bottom left to the upper right. And once we get to that situation, the Fed is going to be much more comfortable in standing pat with interest rates. So I think the Fed, if they do make a move this week, in which I'm expecting that they're going to cut rates on Wednesday at the close of the meeting, it's going to be very interesting to watch this yield right here and the 2-year yield, by the way, which is very important to predicting where Fed funds futures are going to be. But I think the most important thing to pay attention to, folks, is this one right here. Watch this 10-year yield, and if it either goes up or it stays around where it is, 4 and 4, 4.4, 4.35, or something like that. That is a really important point here, and it means the Fed is doing good work right now. But again, I think that next cut is going to be further out into the future. My estimation for Fed funds, I think they're going to cut maybe twice next year. That's it. It's 8 meetings next year, so 2 cuts. Do the math. That tells you that there'll be at least 6 meetings of no policy changes, right? Where they're not going to cut rates, they're not going to raise interest rates. Now, of course, if inflation starts rearing its ugly head again, the Fed is going to start thinking about maybe taking some of these rate cuts back, or maybe possibly even slowing down to the effect of stopping where they're at. They're still, as Chair Powell has mentioned on numerous occasions, the committee is still looking for its neutral rate. They don't know where the neutral rate is. I heard some people talking about 2.5 to 2.75, 3%. Listen, in my mind, I think it's like 3.5%. But listen, if they don't know, then I really don't know, and you don't know, right? So the Fed is searching for that neutral rate. Is it 4.25? Is it 4%? Is it 3.5? Who knows? They'll know when we get there, right? So it's one of those things that you just have to be patient and go and glide along with the markets as they move along here. So again, there's that 10-year yield over here, 4.4% right now. Pay attention to that this week, especially after the Fed meeting on Wednesday, and then of course the press conference by Chair Powell at 11:30 Pacific time, 2:30 Eastern time will be the press conference. All right. So one other thing I wanted to show you here. Why is the market oversold here? Well, look at the New York McClellan oscillator, the NYSE McClellan oscillator. We're down at minus 157. Could it go even lower than that? Sure, it can. But right now we're at levels that we were at the end of October and at the beginning of August, where we launched significantly higher in the markets off of these low McClellan oscillator readings. Okay. Pay attention to what the market indicators are telling you. The market's oversold here, right? And when the markets get oversold here, dip buyers come in, bargain hunters come in, and they start buying up stocks, right? And this morning we see the S&P futures up 16, Nasdaq futures up 104. So we see the market sees this and feels this is starting to get ahead of the action over here, right? So what can you do? What you can do is pay attention to what's happening around you. It's a stock picker's market right now. It's not necessarily a market of stock, a stock market. It's a market of stocks, right? Pick and choose the names that are going to work for you. Find the stocks that are breaking out, have good momentum, have good strong volume, have the strong technicals, and those are the stocks that are going to lead. Those are the stocks that are going to push higher for you down the road. Google is one name that we played last week and did pretty well with. Pulled back a little bit on Friday, and looks like it's going to be pulling right back up again. So I'm looking for this stock to make a move up towards those highs from Wednesday of last week. And see it's about 195. So we get up there, we're at 192 over here right now. You can see that. That's Google. If we can move past that level, I think that the stock has got some room past 200, maybe 205, possibly up to 207 in the next couple of weeks. Now, Amazon is moving up there as well too, 229. We see also a little strength in Meta as well too. So the big cap stocks are dominating here so far before the market opens, right? We'll see if that continues today and into next week, into the holiday week. Now, don't forget, next week is going to be a holiday shortened week, and we have Christmas falls on Wednesday, so only a few more days shopping left before that holiday hits next week. So this week, what am I going to be paying attention to? Obviously, we have the Fed meeting. We do have personal consumption expenditures, income and spending earlier in the week. Today we have the ISM number, or the flash PMI numbers for manufacturing and for services. That'll be coming out today, tomorrow. Industrial production. Last week, of course, we did have the inflation readings that came from CPI on Wednesday and PPI on Thursday morning before the open. And CPI mostly in line. The markets rallied on that. PPI slightly hotter than expected. And again, the combination of the CPI and the PPI is going to create our personal consumption expenditures, the PCE, which is a very important number that the Fed pays attention to every single month. And it belongs in the discussion in their meeting later on this week. So let's see what else. So this week we have some earnings from FedEx, which has really tanked hard over the past couple weeks. But I think with lower energy prices and significantly taking down their quarter back in September, I think that the stock's got some chances to get right back up again. I'm not putting a lot of commitment in terms of dollars behind it, but paying attention to this one. J-Bill is another one that I have on my radar screen, which I bought some calls on last week, JBL. We did have Sienna last week, which really popped nicely last week and making a run towards 100 CIEN. I had some 80 calls on that one, rolled them up to the 90. So you might want to take a look at that one. And also, and then lastly, I've got Accenture, which is ACN. Not a great looking chart here. Technicals are kind of like meh right now. So I think that if the earnings are going to be the driver of this stock, the stock really moves a lot when announcing earnings. So I've got some 360 calls on this one as well too. So that might be one to take a look at. We have other names like Birkenstock coming out this week, Micron, Lennar, General Mills, and Carnival Cruises coming out on Friday morning. That's what I'm going to be taking a look at as well too. But later in the week, and Nike, of course, Thursday night, atrocious looking chart. Look at this one. This is awful, right? I mean, I cannot get my arms around this one. But you know, of course, if it rallies up, makes a move into the mid 80s, then it's on my radar screen, right? But as of now, no, thank you. So that's going to be it, everyone. Have a great day. Appreciate everyone spending a little bit of time with me today. And it's hopefully going to be a really great day. It's getting cold here in New England, really, really cold, and that's okay. It's supposed to be getting cold. It's feeling a lot like Christmas, right? And thanks again for spending your Monday with me. And we'll be back on Thursday morning talking a little bit more about markets, and we'll review what the Fed had to say on Thursday morning, and some earnings as well too, and some more good stuff. So appreciate all of you guys sending this out to anybody who might be able to use it and learn something. Don't forget, we have in the distance, we have a webinar coming up in January. That is our Leaps webinar. Big Leaps webinar. And we also have a couple of new surprises coming out. Oh, and one more thing. If you don't mind me sharing it with you, we have a sweepstakes right now. And if you go to the website, explosiveoptions.net, you'll see the pop-up window in the bottom right. Share a sweepstakes success. You can enter to win a free year of options trading in the chat room, the swing trader service up 51%, and the spread trader service, which was run by Sam, 18% gain. And then we have made 2 new services coming out. I'm going to sneak a little tease in there. You'll get access to those 2 as well. One of them is Leaps. So that is a nice tease for you. So if you jump in there and fill this out, you'll enter to win, and you'll win a nice 1-year free service, $3,000 value in the sweepstakes. So you get all this stuff over here. So hopefully you get a chance to do that. And everyone, I will see you guys all on Thursday. Good trading today. If you're in the chat room, I will see you there a little bit later on today. And good trading today, and I'll see you guys all on Thursday morning. Take care. Bye.